morning and welcome to the streets on BNN Bloomberg. I'm Roger Peterson. Thanks for joining us. Here's some of the stories we're tracking for you now in the BNN Bloomberg newsroom. China's ambassador to Canada, Wang Bi, is urging Ottawa to move fast and make progress on areas of collaboration both countries agreed to during Prime Minister Mark Carney's visit to Beijing last week. During that visit, President Xi Jinping and Carney agreed to resolve a tariff dispute that had Beijing putting levies on agricultural goods from Canada in retaliation for Ottawa's tariffs on electrical vehicles from China. We are watching shares of GE Aerospace today after the company's forecast annual profit above estimates. The forecast was driven by strong demand for high-margin aftermarket parts and services as airlines are expected to prioritize maintenance spending due to aircraft supply constraints. Demand for new aircraft continues to outpace supply as airlines seek to capitalize on robust travel demand across numerous regions. Toys R Us Canada is facing at least 7 lawsuits from landlords, which they say are collectively owed more than $30 million in unpaid rent and other damages from the struggling retailer. Documents filed with an Ontario court last year claim the toy store chain failed to pay rent for several of the properties it occupied in 24 and 25, sparking lawsuits. These spaces were owned by landlords such as Rio Trin Properties and Callaway Real Estate Investment Trust. Procter & Gamble cut its earnings expectations, citing higher restructuring charges and a challenging consumer market. The downgraded outlook comes despite the company reporting slightly higher revenue in its latest quarter, driven by price increases used to offset lower sales volumes. While U.S. President Donald Trump announcing a framework for a deal on Greenland after he gave a wide-ranging address to the World Economic Forum in Davos. Trump rationalizing his plans for taking over the island, and a smiling Trump saying the arrangement gets him everything he wanted. CTV's Washington Bureau Chief Joy Melvin has more.
The U.S. president arrived by helicopter, appearing before business and world leaders stepping up his demand to own Greenland.
So we want a piece of ice for world protection, and they won't give it.
The president falsely claimed the U.S. owned the island, defending it from the Nazis during the war. It's Danish territory, but Trump wants it back. And now he's backing off his threat to seize the Arctic island using U.S. military might.
We probably won't get anything unless I decide to use excessive strength and force where we would be, frankly, unstoppable. But I won't do that. Okay, now everyone's saying, oh, good.
That hasn't stopped Donald Trump's Greenland ambitions, calling for immediate negotiations with NATO allies to annex the island. He threatened tariffs.
We have no interest in picking a fight, but we will hold our ground.
The European Union hit back, suspending ratification of a massive trade deal with the United States. But after discussions with NATO Secretary Mark Rutte coming to Donald Trump's defense.
And when it comes to the Arctic, I think President Trump is right. Other leaders in NATO are right. We need to defend the Arctic.
Everyone looking for an off-ramp to this crisis. Donald Trump posting on social media he won't impose tariffs now on European nations, reaching a deal, he says, with NATO. We have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. The solution will be a great one for the United States of America and all NATO nations.
It's the ultimate long-term deal. And I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
Trump doesn't say if the U.S. will own Greenland, and no one knows what this deal means. But after being pushed to the brink, a sigh of relief.
If the deal here is that the United States can build up our military forces on Greenland, and there's a 1951 agreement between the United States and Denmark that prohibits it and permits it and welcomes it, that might be the off-ramp.
So from the brink of a potential military invasion to a possible trade war with Europe, some say Trump may have miscalculated. Others say there's now a future security deal in the Arctic that reassures this president.
Joy Malbin, CTV News, Washington.
Up next, we'll take a look at the markets before the bell and bring you a featured interview with NATO Secretary General Mark Rutte. Let's see where things are shaping up on the markets, beginning with U.S. futures and fears easing over tariffs on European countries and negotiations about Greenland. So that's the good news. You can see the markets are reacting to that. They are trending up across the board. In Asia, out of the markets closed today, similar situation. Everybody in the green. You can see the Nikkei was up by 1.73. That was a surge in tech stocks there, helping raise the market. And Hang Seng also up slightly, along with the CSI 300, although that was pretty much a wash. Over to Europe now, in a similar situation. Those tensions easing over Greenland. You can see it showing in the markets. Look at those numbers right now. The FTSE 100 up, closing in on record territory again, up by 0.44. CAC 40, similar situation, up by 1.15. And the German DAX up by a similar amount. And the TSX yesterday, it did all right, actually. It was up 0.31, recovering from Tuesday. Energy and miners leading the way, still a couple hundred points below Monday's record close. We'll see what happens today. Some of the winners and losers from yesterday. Vermilion Energy and Athabasca Oil Corp, both up by about 6.9, 6.8%. And going the other way, Wesdome Gold and Vizsla Silver off by 6.83 and 7.08, respectively. And looking at the metals, not surprising, gold as fears ease, the safe haven need is reduced. You can see gold's off slightly by 0.29%. Still, though, up over 4,800. Silver down, hovering around 93, off from its record high, but it's still up for the day, and it's still up for the month. It's still up for the last year. It's up, up, up. And copper is off today as well by 0.88%. And heading to oil, the WCS was up by a quarter point yesterday to 45.43. And WTI south of the border, right now it is off by 2%, back below $60 a barrel. NATO Secretary General Mark Rutte said a breakthrough over Greenland was achieved by focusing on the broader issue of security in the Arctic region. He sat down with Bloomberg News editor-in-chief John Micklethwaite at the World Economic Forum in Davos, Switzerland. Have a listen.
Let's begin with that topic of Greenland. What exactly happened in that room? I've known you a long time. Nobody doubts your powers of persuasion. But we all saw Donald Trump on the podium saying that he wanted that big, beautiful block of ice. Goes into a room with you and he says he has a framework for a deal. What did you do?
President Trump has been clear from when he was in office, Trump 45, also when he came back into office, Trump 47, that when it comes to the protection of the Arctic, with a priority on Greenland, we have to spend more energy, more time, more focus on this, because we know the sea lanes are opening up. The Chinese and the Russians are more and more active. So what we discussed last night, how in a practical sense we can get this done, and we agreed on these two tracks. One is the 7 countries in the High North, including the United States, working together to protect against any adversary. So that will be something where NATO is heavily involved. And then when it comes to Greenland specifically, continuing the discussions they started last week. The Danish delegation, Secretary Rubio, Vice President Vance in Washington, to continue that discussion. Also to make sure that when it comes to Greenland specifically, their economy, their military situation, Russia and China will never get access.
And the Danes and sovereignty, is that all assured?
We didn't discuss at all about that issue. So we discussed how can we protect Greenland, how can we protect the wider Arctic region. And again, I think President Trump was the one who reinvigorated NATO at the summit in The Hague with the famous 5%. I think we can be thankful for the fact that he again has been able to take leadership on this issue. How can we collectively protect the Arctic?
The latest rumors out there that it will be involve sort of bigger bases, longer leases, but not actually changing sovereignty, and the idea of far more American troops. Is that the sort of basis of it?
We didn't go into those details at all. We know that the Danes are completely open to having more American presence in Greenland, and Greenland is open to that. And I think it is good that these discussions take place with the three of them, because at the end I cannot negotiate on behalf of anyone. I was listening to a lot of people. I think there is a landing ground here, but in the end, of course, now we have to make it happen.
Do you think this is the week when Europe finally discovered its backbone?
I think this is the week where collectively, we decided to focus on this important topic under President Trump's leadership, and second, the week where we continue to focus on Ukraine, because I think that's still the main issue at the table, to make sure that Ukraine sustains in the fight.
In Trump's speech, there seemed to be a degree of linkage between the two. We're backing you in Ukraine, I want Greenland. Do you think that's a healthy?
Yeah, I never comment on speeches of leaders. What I do is look at the practical.
Very lucky in this case.
But I look at the practical stuff. And President Trump has been clear from day one in office, and as he was already in his previous presidential term. And I spoke with him then when I was Prime Minister of the Netherlands. We have many meetings, and I know he is really worried about this thing of the Russians and China. And he's right there, getting more access to the Arctic. So I think next to saving NATO, he is now clearly taking the lead on making sure the Arctic stays safe.
And on Ukraine, what is your assessment of what's happening on the front there? Because there seem to be two very clear things. One European leader saying, look, Ukraine is really in trouble. Others saying, look, Ukraine is doing a bit better on the battlefield.
I think what you see is that the front line is not moving in the right direction. It is moving westwards, not eastwards. At the same time, it is extremely slow. The Russians are making very incremental gains, so not huge, very small gains, against huge losses. They are now losing 1,000 people a day in December, so 30,000 over the months. And I'm not talking about seriously wounded, really dead. It's terrible, the losses they are experiencing at the moment. And of course also on the Ukrainian side we see losses, but not to that extent. And so the Ukrainians are extremely courageous in defending the front line, but again it is slowly not moving in the right direction. And I think the peace process is really crucial here under leadership of President Trump again, but also with Steve Witkoff and Jared Kushner, Marco Rubio. And I think the security guarantees are now in a good place, almost nailed. We are close to a deal, I think, on reconstruction, and now this sensitive issue of territory also has to be solved.
Just one thing on that front line, agreed, Ukraine is doing quite well, but back behind that front line, you've got people, it's freezing. There seems to be problems with the politics in Ukraine. Is that where the weakness of Ukraine is at the moment?
I would not say the weakness, but it shows you the Russian brutality and that they are willing to attack innocent civilians and civilian infrastructure, that people are now in conditions of minus 20 degrees, are living without heating, without water in Kiev and Kharkiv and other cities, in smaller villages. And that means that I ask my European colleagues, please keep your eyes on this ball. The Americans are willing to provide Ukraine with the interceptors, the military gear they need, paid for by the Europeans and the Canadians. We have to keep that flow going. We have to make sure that we dig deep into our own European stockpiles when it comes to interceptors, to make sure that these fantastically courageous Ukrainian military can sustain in that fight.
Do you think in the peace talks that issue of where the front line has been sort of solved? Putin wanted all the Donbass. Many people point out that the Ukrainian line where it is at the moment is actually protecting the road to Kiev. So militarily you'd not want to give it away. Do you think that is now set in stone, and Trump has come round to seeing that?
Ultimately it is up to Ukraine, of course, to decide what type of agreement they can do on territory. That's up to Ukraine. Yeah. But what I know is that for President Zelensky to really fully get his mind around that issue, he needs to know that we have security guarantees in place which will prevent the Russians from ever attacking again. The good news is that under French and UK leadership, this coalition of the willing came together. Then the American president said, I will help with backstop, with other unique US capabilities to make sure, building on the Ukrainian armed forces, 800,000 in size potentially, going forward. And that provides a package of security guarantees where the Ukrainian people know now and in the future, Putin will know, if I try again, the reaction will be devastating.
is that one of the problems, again, another European leader, and you hear this repeatedly from your erstwhile peers, is that Trump always comes back to the same thing, that Zelensky is the blockage, not Putin.
I don't think that's fair. I don't think that's fair because he has always, also in many interviews, been very critical about Putin. I think he wants this done. He wants to end the meat grinder, and I'm with him on this. And he is the one who was breaking the deadlock with Putin in February, the first phone call. Only he could do this. He is the leader of the free world. He is the only man who was able to do that, to break the deadlock, and now the Europeans are helping. We are doing this together, Europeans stepping up again. We did it at the NATO summit with the spending. Now when it comes to Ukraine, but I think in the end, Zelensky absolutely wants to do a deal. The question now is, of course, to Putin. Is he willing to do a deal? And that's being tested at the moment.
When you step back from this week, I know you're right in the hurly-burly at the moment, going here, there, trying to keep people together. And as I said, you've got a lot of credit for what happened in that room. But you look at
credit should be with President Trump, and I really mean this, because it was his vision to protect the Arctic, and I think yesterday we found a path forward to collectively do that.
But on NATO, as Mark Carney said yesterday, there is a rupture at the moment. You are head of NATO, that is the North Atlantic Treaty. I've heard more fury from European leaders this week than I think I have ever before in terms of America.
I would say to my
European
European
colleagues,
colleagues,
the long-term consequences of that.
And I would say to my European colleagues, focus on implementing the agreements in The Hague. Build your defense industries, get the spending done, get your men and women in uniform. The numbers of those men and women in uniform, getting them ramped up is crucial. I mean, Germany is leading the way here, spending 90 billion more in 2029 than it did in 2021. So that's fantastic. Opening factories all over the place, but still overall as NATO, including the US, our defense industrial base is still too small and we need to ramp that up. So I think to my European colleagues, focus on really on the ball. And the ball is Ukraine. The ball is the implementation of the The Hague Summit conclusions. And then when you have time after dinner, we can still gossip and talk, but it is about implementing the real decisions.
On that issue, that thing of Ukraine is still, in your mind, the big test. That is the bigger issue rather than Greenland and everything that is happening now.
Yeah, in the end, of course, that's overriding. And when you look at Greenland and the Arctic, it's about Russia and China. When you look at about Ukraine, it is also about Russia. And how do we protect ourselves against Russia? And Ukraine, of course, it's crucial that they sustain in that fight and that we get Ukraine to a sustainable outcome. And this is exactly what President Trump and his team, but also many Europeans supporting him in this, are working towards.
That was NATO Secretary General Mark Rutte speaking with Bloomberg News Editor-in-Chief John Micklethwaite. Up next, Gap Inc. CEO Richard Dickson says that consumers are willing to pay more for sustainable products. We'll bring you his conversation with Bloomberg TV after this. Gap CEO Richard Dickson sat down with Bloomberg Surveillance in Davos yesterday. Dickson discussed consumer willingness to pay more for sustainable products and explained Gap's new project with water.org. Let's have a listen.
I think Gap as a company has always prided itself on doing what's right. The origin story of our company was bridging the generation gap. We've evolved over the years to a purpose that we believe is incredibly powerful, which is bridging gaps to create a better world. And identifying that as a really important narrative in Davos, it's been about a dialogue. And that's really what Davos is about, having dialogue. And we believe the context of the content here for us has always been about purpose and profit. There's not one without the other. I mean, the more profitable we are, the more purposeful we can be. The more purposeful we are, the more profitable we can be. And so we think of ourselves integrating both, and I think that is the representation of our company. And here at Davos, we're doing just that. I mean, you mentioned the initiative that we're doing with Matt Damon and Gary White with water.org. We've created a campaign together called Get Blue, inspired by the Red campaign, which, by the way, Gap was a founding partner of. So it is part of our heritage, and we take a lot of pride in that. As you may know, water is an incredibly important conversation around reduction, recycle, reuse. It's scarce. What we were incredibly inspired by is this stat where 2.1 billion people today do not have access to clean or safe water. 2.1 billion people. And so that is a gap between those who have water and those that need water. And we believe GAP's on the forefront of creating that conversation here, soliciting more partners to get behind it. And we take a lot of pride in that effort.
But don't you feel like this Davos feels different? That there aren't as many people who are interested in hearing that message. And maybe it goes to the sort of divide between generations. But here people are looking to do business. They want to get deals done. They want to make money. They want to figure out what makes sense. It's a much more sort of practical, not touchy-feely type of Davos. Don't you feel that in a really concrete way?
I wouldn't disagree with that. But I do think as we are in Davos, the topics of conversations, obviously minute to minute, we're getting lots of different updates and how the world changes. And obviously there's a lot of business leaders here. There's a lot of dignitaries here, government leaders. And it is a merge. It's a merge of all of that topic and conversation. So while there's dialogue, I think, on multiple subjects, it is true probably that the world of sustainability has not necessarily been the topic of conversation. But we at GAP take a lot of pride in the integration of that as part of our strategy. 50% of the world's GDP is dependent on nature. We're partners with nature, whether we like it or don't like it. And so it is a really important part of the dialogue. It's an important part of our business strategy. We can't make the great clothing that we do without water. And if we're intending on growing our business, well, we have to make sure that there's water in the world. And then that adds responsibility to what we do. And we're very, I'd say forthcoming around the fact that we're making progress, but it's certainly not perfection. And I think we're a champion here this week at Davos.
Davos is certainly a place for dialogue. Also, in the absurdity of it, I heard this whole pitch from Gary Wright and Matt Damon because I sat next to them randomly at a dinner.
Okay.
And I'm curious to know, I remember that Gap Red campaign. It's also profitable.
Yeah.
It is a way to spark consumer excitement and get people in. What are you actually planning for the store?
Well, that's a good point because I think done well, it drives relevance. And relevance can drive revenue. And in the context of that integration, it is one and the same, right? So the Red campaign, which we were a founding partner of, is a great example. Taking a meaningful message that resonates and then developing products and partnerships and programs that bring more awareness and then more revenue to solve the problem. Get Blue is a very similar methodology. And it is a methodology to solve, if you will, the water solution. It's not necessarily the solution, but it is a methodology and a mechanism that we think is going to be very powerful. We're going to create a line of great clothing, obviously, that will be intended to drive more awareness, as well as part of the proceeds will go to help fund water.org. We've got amazing partners lined up, Starbucks, Amazon, Ecolab, and we're out here soliciting more support for it. So it will be a meaningful, what we call movement, that will help solve the issues of our day.
When it comes to relevance, right now the consumer has so many options, and we continue to hear from business leaders, though, the consumer is resilient. What are you seeing at your stores?
We concentrate on doing the best job that we can with great style, great value, great product, great quality. It is our job, day in, day out, to solve and attract that consumer to our brands. It starts with product, of course, but the narrative around that product is what drives relevance. And so we take a lot of time as storytellers to tell our brand stories. And we're doing a good job. I mean, it resonates. We had, as we reported last quarter, 7 consecutive quarters of comp growth, led by Gap, which is our founding, flagship brand, up 7%. And that's, again, consistently delivering. Old Navy, our largest brand, was up 6%. Banana Republic on the scoreboards up in single digits as well. So it's resonating. The message is resonating with our consumers. Our product is resonating with consumers. And ultimately, that can create a flywheel. Better storytelling, better product, better retail execution. Retail is detail. Every detail matters. We hear every day, some good experiences and then some places that we need to work on. So we're always talking about progress, not perfection. But it's working.
To build on what Anne-Marie's talking about, the sort of choicefulness or pickiness that people have because of the greater focus on affordability and the fact that there has been a real erosion of that. We did speak a number of months ago and you were saying that people will pay for quality. Are you seeing difficulty passing along prices, say, from tariffs or from increased costs more generally because of the price of commodities?
Well, I think, consumers are smart. They see value. They know authenticity. And we pride ourselves on being, an authentic brand with great price, great value, great quality, and great style. That's not easy, by the way, at scale. And certainly with all of the headwinds, tariffs included, we and our teams are doing a fantastic job organizing around the consumer value proposition. And so, as you can imagine, behind the scenes, there's mitigation strategies as we absorb tariffs. There's the day-to-day expenses that we have to consider running a business of our scale. But with the consumer in mind, all day long, we're able to present a portfolio of assortment of products that are appealing to them. And it is resonating. So the more that we focus in on doing what's right by the consumer, and we have the expertise to manage that day-to-day and what we call control the controllables. There are certain things that are not in our control, as we here sit in Davos. But what we can control, we can execute with excellence and deliver that proposition to our consumers and our shareholders.
To talk about the uncontrollable, because it does seem like there's a huge focus on geopolitics. How difficult is it to adjust if the regime of tariffs is shifting, if there isn't sort of a stable backdrop that you have to adapt to?
Look, it creates complexity, and our company is, in its 56th year, and there have been lots of different dynamics, both in, political, waves and policies and various different headwinds that we continuously have to deal with. And again, we go back to controlling the controllables. The dynamics of doing business today are quite complex. We all wake up in the morning and see the news and see that we've got new subject matter to deal with. But it's really important to stay steady and stay consistent, and in our case, stay very focused on the consumer. And we've been doing a good job of that. And so, again, headwinds will continue to come, but I think as long as we have a strong team, we really focus on our strategic priorities with the right due diligence and execute with excellence, good things happen, and you get that flywheel that continues.
And that was Gap Inc. CEO Richard Dickson speaking to Bloomberg Surveillance in Davos. Still ahead, a U.S.-based venture capital firm is betting on Toronto's tech scene. Jenna Madanek, managing partner of Forum Ventures, will be in studio after the break. China's ambassador to Canada, Wang Di, is urging Ottawa to move fast and make progress on areas of collaboration both countries agreed to during Prime Minister Mark Carney's visit to Beijing last week. In that visit, President Xi Jinping and Carney agreed to resolve a tariff dispute that had Beijing put levies on agricultural goods from Canada in retaliation for Ottawa's tariffs on EVs from China. Toys R Us Canada is facing at least 7 lawsuits from landlords which say they are collectively owed more than $13 million in unpaid rent and other damages from the struggling retailer. Documents filed with an Ontario court last year claim the toy store chain failed to pay rent for several of the properties it occupied in 2024 and 25, sparking the lawsuits. The spaces were owned by landlords such as Rio Trin Properties and Callaway Real Estate Investment Trust. TikTok will be able to continue operating its subsidiary in Canada for now, at least, with the government's blessing after a judge shelved a previous order for it to wind things down. In November of 2024, under former Prime Minister Justin Trudeau, Canada ordered ByteDance to close its subsidiary, TikTok Technology Canada. But yesterday, that order was set aside by the federal court after a motion made by Canada's government in TikTok's appeal. Procter & Gamble cut its earnings expectations, citing higher restructuring charges and a challenging consumer market. The downgraded outlook comes despite the company reporting slightly higher revenue in its latest quarter, driven by price increases used to offset lower sales volumes. And with the fears over any tariffs in Europe and Greenland, looks like negotiations will start at some point. The market's responding favorably right now. You can see all of them are in the green. The Dow up by 0.4 right now as we head into the trading day. The Nasdaq up by 0.9 and the S&P 500 up by 0.6. New York-based venture capital firm Forum Ventures is betting on Toronto to be a big name in the AI scene. That's why it's built an AI venture studio in Toronto. And here to shed more light on how its investment on Toronto is paying off is managing partner for Forum Ventures, Jonah Madanik. Jonah, thank you very much for joining us. You guys have been here a while, and now you're adding on. What will you be bringing here with this new forum, or with this the new studio, venture studio?
Well, we're betting big on Toronto as the spot to build the next generation of great artificial intelligence companies that span North America. The goal is to build more international champions right here out of Toronto.
And why is that? Why Toronto? You have New York, you have Silicon Valley. What does Toronto bring into that little triangle there?
The short answer is talent, technical talent. Forum Ventures is lucky. We're based in New York. We were born in the Valley. But we're really betting on Toronto. If you look at some of the best AI advances that have ever happened, they're all here out of Toronto. OpenAI's CTO was out of Toronto. Jeff Hinton famously invented neural nets here in Toronto. Mm-hmm. So that massive pool of artificial intelligence talent is what we're betting on.
Now, that's the past. Do you still think there's a present and a future with it?
So there's a present with some challenges. It's unquestionably true that Canada continues to produce some of the best artificial intelligence talent out there in the world. It's also unquestionably true that we're starting to lose some of the talent wars for the best founders. 50% of Canadian founders that raised more than $1 million of venture capital last year did so while living in the United States. And we'd like to change that.
And how did that change compared to previous years? I mean, I imagine we do see people heading south no matter what, but have you seen a jump?
Yeah, a pretty significant rise, actually. So both anecdotally and in the data, we're seeing year-over-year rise, where increasingly Canadian founders are saying, we need to do this based out of the U.S., where in the past we've got great world-class examples of Canadian founders expanding to the U.S., but doing it from here. And we'd like to help reverse that trend.
Now, is it everything that's going on with the tariffs and everything else with the U.S., and it's just simpler to work out of the U.S., or is it they feel there's a lack of support here in Canada?
Yeah, I think that's a great question. So the way I might think about it is tariffs have been an issue, but in software and technology, most of those businesses aren't actually subject to tariffs. Mm-hmm. And so it will have impacts on those businesses. This is more just a trend that has been ongoing for a while. It's been accelerating, and there's kind of two major factors. One is absolutely the lack of capital and support. Only $2.1 billion was raised for venture funds last year in Canada, the lowest number we've had in years. And there's 25 times more venture-backed businesses in the US, up from 11 times in 2015. So unfortunately, this is a trend that's been accelerating, and the current political climate isn't helping.
Now, are the Canadians, is the Canadian venture capital, is it going down south, or are they just not putting money forward?
No, the Canadian venture capital continues to invest in this ecosystem. There's just less money to invest in this ecosystem. The housing situation didn't help. We were competing against huge paper gains in housing that a lot of the productive capital was going into in Canada. And so we're just trying to break a trend. And increasingly, the Canadian champions are happening in the US. I don't know what our next Shopify is. And in order for this economy to continue to grow at the pace it needs to, we need more Shopifys.
So it's quite a challenge for you. Then what are you looking for? What are the things, and how do you convince them to stay?
Well, one of the things we're doing to convince them to stay is showing them they can build a winner here. That's what great founders want to do. They want to build international winners. So by surrounding them with best-in-class talent, best-in-class know-how, the exact same things they would get if they were in New York or Silicon Valley, we're hoping we can show them they can stay here, build global winners here, and add more Canadian jobs here.
And how long has the studio been open for, the venture studio? For AI?
Yeah, we're in year 3 right now.
Yeah.
We've managed to build 17 companies here in Toronto, and we're hoping to build another 18 in the next 2 years and then keep going from there.
And what kind of money are we talking about for that?
So for this one, we've raised about $25 million, and we'll be back out on the street hoping to add to that tally.
And what kind of a response have you had from startups?
Really great response. So founders are doing it. Downstream investors are investing in our businesses, both in Canada and the US. We've had some of the biggest venture capital firms in the world invest in some of these businesses and back some of our Canadian founders in some of our builds. And we're hoping to see that trend continue. And in the 3 years, what are some of the success stories, and have they stayed? Yeah, so we've got some great successes, some truly world-changing technology around the intersection of artificial intelligence and GLP-1s, around really turning education funding into outcomes. And we are seeing founders stay. I do think the real test will be what happens as they truly start to scale, and can they find that scale talent here? We've always had the technical talent. Are we going to be able to convince people to truly headquarter global champions here? And that's unknown.
And the ones that are staying so far, what are they telling you?
They're telling us that it's all about the talent. And unless they can find the talent, then it's going to be a challenge. The other thing is there is a different tax regime in Canada and the US. And the simple fact is the tax regime in the US is infinitely better for both founders and investors. And so there's more capital there. And at a certain point, the advice they're getting is to move down south.
Because the opportunities are there. With the new prime minister, who's definitely more business oriented, do you have optimism about that changing?
So we are seeing in this new administration some absolute positive signals. They're listening. They understand the problem. The team understands the problem, and they are starting to put the things in place that will help. We do still need a massively updated tax policy that is competitive with what's down south, and we do need a commitment to artificial intelligence specifically. And while we are seeing progress, we need to see more.
And I imagine the schools must be a big factor for you here. What kind of work do you have with them? And are they sending people your way and trying to work with you to keep them here too?
Yeah, I'm lucky enough to do a lot of work with the University of Waterloo. I'm lucky enough to do a lot of work with our hospitals, which are another great set of institutions that are turning out AI research. I'm lucky enough to do a lot of work with the University of Toronto. We have the best-in-class institutions, globally recognized. The American firms are poaching from here all the time. Our challenge is turning that world-leading research into commercial outcomes, and that's where Canada's falling down. The universities and hospitals aren't the problem. They're part of the solution set.
Okay, we have to wrap it up there, but Jonah, thank you very much for coming in. We appreciate it. That was Jonah Medanik, managing partner of Forum Ventures. Still ahead, hot picks in beauty and healthcare. Time now for hot picks in beauty and healthcare. We were joined by Susan Anderson, managing director at Canaccord Genuity, and we kick things off with why she likes Sally Beauty Holdings as one of her top picks.
A quiet stock that really not a lot of people are aware of, but it's a beauty retailer and wholesaler. So they cater to both retail consumers and then also pro salon customers. They have about 40% of their business coming from hair coloring and then 80% from both hair coloring and then hair maintenance. So both of their channels, really focused on hair. We view them as having kind of a monopoly in the hair coloring space, as they're really one of the few companies out there that offer such a large selection of pro hair coloring, both for salon and then do-it-yourself at home. They've really been reinvigorating their business with new growth opportunities, cost efficiency programs, and store remodels. They're finding new areas to grow with through innovative products, store refreshes, a lot of digital tools, and acquiring additional pro distribution. And then going into new product categories such as skincare, and then also opening new formats such as Happy Beauty, which is a new kind of value beauty format, consumer format that sells things like K-Beauty. They also have a Fuel for Growth initiative where they're saving about $120 million through fiscal 26 to get EBIT margins back to double digits. They're about 8.5 right now. With Sally trading at just 17 times next year's earnings estimates, I think there's an opportunity for multiple expansion. Most other specialty retailers trade, high single digits to low teens multiple valuations. And then also they're looking to get back to high single digit to double digit earnings growth going forward. So we see this one as a good value play. We have a $19 price target with 9 times next year's earnings.
Your next idea is Inter Parfum. I hope I have the pronunciation right. What do they do? Why are you attracted to that stock?
Correct. Yeah. So they're a fragrance licensor. So they primarily sell fragrance, which they license out the names from luxury brands such as Coach and also lifestyle brands such as Guess. With fragrance sales overall growing double digits recently, the last 3 months, Circana data in the U.S. has it growing double digits. We think that they're really in a very good position to take advantage of the strength in fragrance. We're seeing a lot more consumers come into the category and use it really as their daily routines, particularly in the younger consumers. The area of fragrance mists, which are a little bit cheaper, is really starting to take off with this younger consumer. IPAR, the stock's up a bit recently, but it trades still at just over 18 times next year's earnings versus its mid-20s range over the last 5 years. And this is really the lowest valuation we've seen since the Great Recession, mainly due to a mismatch in sell-ins and sell-outs. So, retailers really globally have been kind of really reeling in their inventory. So even though fragrance sales continue to be double digits, they've been trying to get their inventory down really to the lowest levels we've seen in history, which AI is really allowing them to do that. So that's hit really, IPAR sells to these retailers, but the consumer sales are still very strong. And I think we're coming towards the end of kind of that stable, really mismatch of sellouts to sell-ins. And once we do, I think that IPAR sales are going to return to normal. They guided pretty conservatively for fiscal 26, which is their next fiscal year, for sales to be up just 1% when, fragrance sales are still growing high single digits to double digits. So I think that there's upside to the numbers for this year, and this is one we would be buying on these really low valuations.
We're tight for time. I'm sorry about that. Tell us about Prestige Consumer Healthcare, PBH. What do they do?
Yeah, so PBH is a staple-like play. They play in the OTC space, and they have a portfolio of very niche brands such as Dramamine and Compound W. These brands have limited competition and private label exposure, just given they're in very niche areas. The large CPG companies don't really play in the space, as it's just too small for them. It wouldn't really move the needle. Instead, those guys play in large mega categories such as cough and cold. PBH also has best-in-class EBIT margins in the low 30% range and solid free cash flow, which they've been buying back stock with. They also look to potentially make acquisitions to accelerate the growth. But, if they don't buy anything, they'll just continue to buy back their stock. They generate about $250 million in free cash flow every year. So every $80 million in stock buybacks is about 10 cents to earnings. The stock pulled back last year on supply chain issues and then also retailer destocking similar to Inter Parfums. But they had some supply chain issues of their own with their eye care business, which should be fixed by the back half of their fiscal 26. They just bought an eye care manufacturer in Canada, so they're taking a good portion of that in-house to limit future issues with it. But they're high quality, high margin, staple-like names, solid free cash flow. Current free cash flow yield about 8%. The stock trades at about 13 times next year's earnings estimates versus 15 times historically and 20-ish times for large cap personal care players. So we think this is an attractive entry point.
And he was speaking with Susan Anderson, Managing Director at Canaccord Genuity. Still ahead, we're taking a look at some of the notable analyst calls and recommendations moving the markets from TD Cowen analyst Craig Hutchison. It's in the metals and minerals sector. Let's take a look at some of the notable analyst calls and recommendations. Actually, just one analyst today, a busy boy, TD Cowen's Craig Hutchison. Here's what he had to say. He cut the recommendation on Teck Resources, Class B, to hold from buy, raise the target on Lundin Mining to 42 from 28, and maintained a buy rating. He also raised the target on NextGen Energy from $15 to $20, maintaining a buy rating. Hutchison also upped Capstone Copper Core to 17 from 14. Cameco, the price target is up to $185 from $150. And First Quantum Minerals is also raised to $41 from $34, but maintaining his hold rating. We are not done yet. And Arrow Copper Core is raised to 45 from 33. Busy day for him. Okay, when we come back, we'll take a deeper look at the reaction to Trump's speech in Davos. Well, the Prime Minister was on his way home when the U.S. president was calling him out at the Davos Forum, chastising Carney for his speech. Trump saying, "Remember that, Mark, Canada lives because of the United States." CTV's senior political correspondent, Mike Couture, has more.
I watched your Prime Minister yesterday. He wasn't so grateful.
The U.S. president with some tough talk for Prime Minister Mark Carney. It comes a day after the Canadian leader spoke in the same room at the World Economic Forum, criticizing superpowers that use tariffs as leverage.
But they should be grateful to us. Canada lives because of the United States. Remember that, Mark, the next time you make your statements.
Donald Trump didn't say which statements, but Carney's speech urged middle power countries to act together.
When we only negotiate bilaterally with a hegemon, we negotiate from weakness.
Trump also said Canada gets a lot of freebies from the U.S., but it's unclear what he was talking about. Some Democrats say the comments about our country are unfair.
Canadians have followed us into every major conflict we've been in, whether we were right or wrong. This president has so disrespected them that they're now talking to China.
Carney wrapped up his trade trip to China and Qatar with a stop in Davos, but he didn't have anything to say about Trump's speech. In a statement, the Prime Minister's office told CTV News there are no plans to comment on the president's speech. The two leaders also didn't have any interaction while in Davos, which could be a good thing, according to this former special advisor on Canada-U.S. relations to then Prime Minister Justin Trudeau.
Canada will be well served to have a more dedicated, specific conversation with the president or his team in the coming weeks and months, especially on the topic of CUSMA as we head towards a review deadline.
And there's little time to waste, as that deadline to decide what happens next with the trilateral trade agreement is July 1st. Mike Couture, CTV News, Ottawa.
And that is it for us here on the street. Andy Bell's up next with the Open, and the market's open in 30.